My audience knows that I believe doomers and crash bros are 100% pure evil. These individuals, in my opinion, create fear and crush hope on purpose to pay their rent. I cannot imagine a more disgusting way to do this business. But that said, I do think there are also bears, and I respect bears. I follow bears. I read the opinion of bears. So I think it's a valuable discussion. Where do you draw the line between a bear and a evil crash bro and doomer? Instead of just getting my opinion, I thought we'd have this conversation with another millionaire, Anna Kelly. How you doing, Anna?
I'm doing great. Great to see you. What a fun topic, especially Michael, because you and I are not doomers. We're not even bears most of the time, but
Correct.
we've been called so in comments.
Yes, we have.
We're looking at data. So off the cuff, my first thought is a doomer, like you said, they make money from being negative, right? It's like the American news media, right? They're doomers, right? They know that negativity and fear sells, gets people to watch. And so, yeah, a lot of them are monetizing fear mongering, where bears are more generally more educated on what it is they're talking about and looking at signs and data that make them nervous. They see some risks and they talk about those risks as they become more and more apparent. So I think right now it is important to kind of know the difference, especially when we're talking about the economy, which is what, we like to talk about a lot, because when you look at the economy, there are cycles, and these cycles are very repetitive. And believe it or not, as many people change and technologies change over time, history kind of tends to repeat in cycles. So you've got debt cycles, you've got inflation cycles, you've got gold cycles, you've got growth cycles, you've got the business and the economic cycle, you've got real estate cycles. And so if you have someone, I think like us, who in an expansion, when things are growing in the economy and they're growing in real estate and they're generally doing well, you better hear from us. Hey, the data's really good. There's a lot of optimism. There's a lot of things that are going well that you can monetize and take advantage of that opportunity. But if people like us who have made money during those run-ups start to say, we're kind of peaking, there's some signs that a business cycle is turning over, that we might be going recessionary, as I've been saying the last couple of years, really since late 2022. And we've had these recessions. I've been called a doomer, and I'm not. I've been called a bear. And here's the thing, when the economy is turning, and these cycles do turn, and data says, hey, watch out, watch out, watch out, there's more like headwinds against you than tailwinds pushing things up, then you need someone that's going to look at that data and say, things are not looking so great. But the other thing is, hopefully, if they're a good bear, not an evil doomer, they're going to say, here's what you do when things get worse. Here's how you hedge. Here's how you protect. Here's where you find opportunity, how you mitigate the risk of those opportunities, and you mitigate opportunity costs. And then when we hit a bottom and things get better, then we'll be a little more optimistic, and you'll start hearing us shift our tune as things start to shift and the data proves out what we're doing. So that's the difference to me between a bear and a doomer.
I think we're going to go through more of them, but I want to summarize, because I agree with you. I think the biggest delineation between a bear and a doomer, and again, I think we have plenty of doomers on YouTube. They have massive channels, and I will say again, I believe they're pure evil. The biggest difference, in my opinion, is actually one thing you hit there near the end, and that is a bear not only gives their opinion about, why they think it's either, it's a bubble or it's going lower or whatever the reason is, but they tell you how to invest if you agree with them.
Right.
And that never happens with a doomer. A doomer's full job is to make you afraid, make you do nothing, and come back tomorrow for another dose of doom.
Yeah.
Right. And that's the biggest difference, in my opinion, between a bear and a doomer. Is a doomer will never tell you how to take advantage of it. And you and I both, here's the deal. The market has bull and bear cycles, right?
Absolutely.
And I know a lot of people who make a lot of money in a bear cycle.
Yeah.
And if you're a doomer and your job is to pay your rent because you're a horrible human being, You're just telling people to do nothing. Come back tomorrow. I'll tell you what's going on. Come back tomorrow. You can go to their YouTube channels and their thumbnails are all the same, right? The house is on fire and it's yellow font. You can go back years, right? So again, one of the clearest delineation is the person producing the content telling you how to take advantage of it, make real money if you believe them. That's number one.
Yeah.
Number two, I believe is, actually, I'll go here first. I think you're right about the cycle, because there are plenty of bears out there that have been proven right or wrong in different cycles. But if you go back and study them for decades, they're not always bearish, right? There are some times where the sun is in your face, the wind is at your back, and those are expansionary cycles. So again, I think bears, will change their opinion as the environment changes. And doomers, they don't care. They're just going to produce the next crazy headline with partial or incomplete information, because they're paying their rent by crushing hope. And that is a disgusting thing I see day in and day out in social media. They're just stealing hope. And as we've said many times, the whole key to getting rich or wealthy is you got to start with hope and belief. And doomers are evil because they crush hope. So,
either evil, or they're truly just fearful people that are stupid. If
they're
monetizing
evil.
If they're monetizing it with millions of followers by being negative, and they always are, then yes, they're monetizing fear and doom, and that's definitely not good. I would say the other thing is, don't just believe that because you hear something negative that they're instantly a doomer and tune them out, because the opposite of being paralyzed with fear and doing nothing is educating yourself by listening to advisors who are actually wise, who have some experience with their calls, right? And so one of the things that I like to do is listen to, and I wish there were a lot of much older women than me. There aren't a whole lot of them back in that era, but I listen to a lot of much older men who have made a lot of money through many different cycles, ups and downs, who are older than I am, who have lived through the 70s, who have studied the 20s, have lived through the 80s and the dot-com bust and the great financial crisis and COVID, and who have figured out how to make money in up and down cycles, have gotten really good at saying, here's the risks and here's how we try to balance those risks. And when they talk about that, and they do it from a place of experience, and they say, hey, I'm getting a little nervous because of what's happening with the money supply, right? I'm getting a little nervous because of what's happening with debt and credit cycles, and how much debt has to be refinanced in the next 2 years versus the quality of the collateral, and how much lending might pull back and what that might do to the economy. When you listen to people that are showing you, here's when I was real excited, here's why we're really nervous, and then to this point, here's what we are doing about it. Then they talk to you about the smart ways that big money and smart money is trying to hedge risk, because that's really the name of the game. If you don't want to be paralyzed and do nothing, you've got to constantly be thinking like a smart investor. Where is there opportunity given the risk in the market? And then you have to decide for yourself, how much risk am I willing to take for the opportunity of making those returns? And you become really educated by listening to those people who have been bears and they've been bulls, and they've been wrong on timing, because timing is really tough to get. And so listening to people that say, if I'm right and we're in a recession now, or if I'm right and the recession's tomorrow, or if I'm right and housing crashes tomorrow, here's what I'm going to do on offense, and here's what I'm going to do to play defense. And so you've got, the old saying in the stock market, the whole 60-40 portfolio, 60% stocks, 40% bonds, because one tends to go up and one tends to go down. You listen to those guys now, they sound kind of bearish. They're like, the 60-40 portfolio is not going to work. We're in an everything bubble. We're in a stock market bubble. We're nervous about AI. We're nervous about credit. We're nervous about tariffs. These things could prick it. But you know what they tend to say? I could be wrong. And we're not out fully yet, because we think it's going to correct, but we're taking some off the table. And when it crashes, we're going to go buy, and we're going to go buy this or buy that. When you talk, look at real estate channels, which is a lot of, the followers on this channel follow real estate guys. You can listen to the ones that are like, the economy is going to crash, real estate's going to crash, all these foreclosures are going to happen. Are they telling you when that happens, that's the maximum point of opportunity for you as a real estate investor to take advantage of the motivation to buy properties at rock bottom prices that you're never going to see again for the next 18-year real estate cycle, which is about what they tend to be, right? If they're not telling you, hey, this is bad if it happens, but if it does, you're going to make a whole lot of money if you do X, Y, and Z, then you just need to tune them out. And you need to start listening to people who have experience, who are telling you the good, bad, and the ugly, and how to capitalize on the bad. And when it's too bad, tell you, hey, stop playing, right?
Yeah.
I'll say this one more thing, not to plug myself, but when commercial real estate started to really shift, I started saying, you know what? I'm not syndicating anymore. It's too much risk for the reward. I'm going to pull back. I'm going to be patient, and I'm going to tell my investors, be patient. Don't assume it's all going to bounce back tomorrow. Be patient, play the long game, buy properties that you're going to hold the long term for good cash flow, lock in good debt. And when it's that time, people are going to call me irrationally exuberant instead of calling me a doomer, because I'm going to look at and tell you, when is it go time? You know, I'm from the South, right? The old Kenny Rogers, you got to know when to hold them, know when to fold them, know when to walk away, and know when to run. And if people are telling you that over the history of their investing career, then there's someone that you should probably listen to and tune the other guys out.
Yeah. The last thing I love to say about these folks, the difference between a bear and a doomer is, you know, people make calls, and frankly, I make calls all the time, and I respect people that make calls because frankly, that's how I learn. The difference between a bear and a doomer on that aspect is bears will often admit what they got wrong and why they got it wrong. You know, they didn't expect government intervention, or this or that happened that wasn't on their playlist, right? Their bingo card. And that's why they were wrong, right? So they'll get better. That's why I make calls, because I frankly hope most of my calls are wrong, because that means I have opportunity to improve. A doomer never, ever admits why they were wrong. We have doomers that have been creating fear content for 2, 3, 4 years daily, have been wrong for years and never admitted why they were wrong. And because if they admit they were wrong, that might drive away the audience. They just keep doing the daily, you know, because they are monetized and they are evil people. These are talentless hacks who couldn't hack it as mortgage brokers, real estate agents, underwriters. They are just talentless, and they can't survive unless they now are tapping into the fear of, you know, flight or fight of the human condition. This is like the most disgusting way to pay your rent, but that's all they have. And they'll just keep doing it until it doesn't work. So again, a bear will admit what they got wrong, identify what they got wrong, so they're better next time. A doomer doesn't care about being right. Just wants to create the next fear-based headline.
And I think one other thing to that point, you know, you mentioned it a lot, some of these channels, it's people that's all that they do. And so if they're not actively investing in what they're talking to you about and the investment advice that they're giving you, probably not someone you should listen to, right? If they have a real estate training course and they're not doing real estate, probably not someone you should listen to. If they are telling you about, you know, the crash bro, everything's going to crash, and they're not investing at all, probably not someone you should listen to. So listen again to people, pick your poison and pick who you're going to listen to, and make sure they are people that actually have wisdom and experience and are making money still today doing what it is that they preach. If they, you know, you have to practice what you preach. If they're not practicing, then you probably shouldn't listen to their preaching.
Amen. At the end of the day, folks, we do have an amazing school community that is with a K, school.com/ORAT, one rental at a time. It is where nearly 500 wealth builders go to interact, forums, Q&A, 9 different accountability groups, thousands of dollars in free education. Go to school.com/ORAT. And then Anna, if somebody wanted to follow you or reach out, where do they go?
Great. I've actually been on a couple of your school community classes and lives. A great community, great Facebook community as well. You can follow me on Facebook or LinkedIn at Anna Kelly, Aria Mom. And if you're looking for real estate and wealth coaching or consulting, you can book an appointment with me on my website at AnnaKellyInvesting.com.
Thank you so much. Have a great week.
You too.